Are you ready to unlock institutional-grade insights across global macro markets? Today, we deliver an advanced smart money concepts multi-asset breakdown, mapping internal structural shifts and key liquidity sweeps. We dive into the precise HTF order flow across four major charts: the precious metals sector, major foreign exchange, and elite equity indices. We reference explicit data from the structural frameworks provided in the silver chart, the EURUSD chart, the SPX500 chart, and the US30 chart. This technical presentation uncovers exactly how the algorithms manage premium supply pricing and deep discount demand arrays. Retail traders constantly fall victim to induced trendline breaks and early breakout traps. However, our objective is to isolate where the true banking orders reside. Prepare your charting terminals as we dissect institutional intent, uncover imbalance zones, and set high-probability directional bias. Please watch the full video. XAG-USD exhibits a clear bearish structure on the hourly timeframe, characterized by consecutive bearish break of structure prints confirming heavy institutional distribution. Please watch the full video. Following a rapid sell-off from the $78 premium supply region, the asset is currently testing a major demand pocket. High-frequency algorithms are actively hunting internal liquidity pools before the next macro expansion phase begins. Our primary focus is on the premium shorting entry zone located between 65.00 and 66.00. We are waiting for mitigation here. Once bearish price action confirms, we can expect the downward move to start, targeting major liquidity pools below. The invalidation level is strictly set at 67.20. If price breaks this, our bearish bias changes. For this dominant trend setup, our objectives to clear sell-side liquidity are T1 at 62.00, T2 at 60.00, and T3 at 58.00. Alternatively, given the current demand interaction, an aggressive counter-trend recovery scenario exists. The bullish entry zone rests between 62.00 and 63.00. We are waiting for mitigation here. Once price action confirms a lower timeframe structural shift, we can expect a corrective move to start. The invalidation level for this internal structure is strictly set at 60.80. If price breaks this, our corrective bias changes. The primary objectives to clear buy-side liquidity for this alternative scenario are T1 at 66.80, T2 at 68.80, and T3 at 73.00. Market participants must monitor order flow closely during the upcoming New York session open for volume confirmation. Currently, institutional order flow heavily favors the bearish continuation scenario with a 70% probability, while the bullish corrective recovery remains at 30%. Manage your risk exposure precisely according to these structural parameters. Professional traders execute with discipline. This is an educational video, not investment advice. Follow for more. The next analysis is coming very soon. Are you confused about where EURUSD is heading next as it traps both buyers and sellers? Please watch the full video. The hourly chart reveals a dominant bearish trend following a decisive break of structure. Heavy sell-side displacement has driven the pair directly into a major pullback demand area. While we notice an immediate reaction from this institutional demand, a confirmed bullish shift has yet to materialize. Rallies into the overhead supply zones, specifically near 1.1580 and 1.1630, are highly likely to attract further institutional selling pressure unless the lower demand structure holds firmly. Our focus is on this entry zone between 1.1520 and 1.1540. We are waiting for mitigation here. Once price action confirms, we can expect the move to start. If institutional demand holds and a bullish shift occurs, our upward objectives activate. Scenario 1 aims for T1 at 1.1580. Scenario 2 targets T2 at 1.1620. And Scenario 3 seeks T3 at 1.1660 to clear buy-side liquidity. For this long perspective, our invalidation level is strictly set at 1.1490. If price breaks this, our bias changes. Given the structural order flow, a bearish continuation remains our preferred outlook. A sustained break and retest below the 1.1510 demand level validates this downward trajectory. In this scenario, we look to clear sell-side liquidity at our lower objectives. Scenario 1 targets T1 at 1.1450, Scenario 2 targets T2 at 1.1400, and Scenario 3 targets T3 at 1.1350. For this short perspective, our invalidation level is strictly set at 1.1565. If price breaks this, our bias changes. This is an educational video, not investment advice. Thoroughly analyze these structural parameters. Always manage your risk effectively, closely monitor the institutional footprints, and wait for clear structural confirmation before committing trading capital today. Greetings, market participants. Welcome to this institutional briefing on the S&P 500 index. Please watch the full video for the complete strategic breakdown. While higher timeframe structure remains bullish, the hourly chart exhibits a structural correction. Following aggressive institutional distribution from major supply at 7,600, price printed multiple down structure breaks, transferring liquidity lower. We are currently interacting with a key demand level at 7,220. This is an educational video, not investment advice. Our primary focus centers on this tactical entry zone between 7,240 and 7,260. We are actively waiting for mitigation within this area. Once price action confirms order flow shift, we can expect the upward continuation to start. Our invalidation level is strictly set at 7,200. If price breaks this, our structural bias changes immediately. In this bullish scenario, the market seeks to clear upside liquidity at our main objectives. Scenario 1 targets T1 at 7,360, Scenario 2 targets T2 at 7,440, and Scenario 3 targets T3 at 7,600. Alternatively, we must account for a bearish breakdown. If the hourly candle closes below the 7,220 structural floor, it signals an institutional shift. Our alternative entry zone shifts to the retest region between 7,220 and 7,240, requiring fresh mitigation signs. For this downside expansion, the alternative invalidation level is placed at 7,280. If triggered, the downward momentum will accelerate to clear sell-side liquidity pools. The downside objectives are clearly defined. Scenario 1 targets T1 at 7,170, Scenario 2 targets T2 at 7,100, and Scenario 3 targets T3 at 7,000. Currently, our internal capital distribution metrics show a 60% probability for the bullish bounce and 40% for bearish continuation. Smart money traders must always manage risk effectively, execute with precision, and monitor structural confirmation closely. Follow for more. The next analysis is coming very soon. Analyzing the H1 market structure of the US30 to identify institutional order flow. Please watch the full video. The primary time frame reveals an overall bullish narrative. However, a sharp rejection from premium supply indicates short-term weakness. Price action has pulled back aggressively, leaving clear internal liquidity behind while driving deeper into a major discount demand array. This area shows signs of strong institutional defense. Our focus is on this entry zone between 49,700 and 49,850. We are waiting for mitigation here. Once price action confirms a lower timeframe shift, we can expect the upward move to start toward major internal liquidity pools. Our invalidation level is strictly set at 49,450. If price breaks this, our bias changes. For the bullish trajectory, our targets are structural. Scenario 1 aims for T1 at 50,400 to clear initial minor highs. Scenario 2 targets T2 at 51,100, focusing on the unmitigated supply zone. Scenario 3 targets T3 at 51,600, sweeping the premium liquidity pool. Alternatively, if order flow shifts and bears take control, a decisive H1 candle close below 49,600 alters our framework. Our primary focus zone shifts to the short side. Under this bearish alternative, the new invalidation level is strictly set at 49,900. If this level breaks, our bearish bias changes. For the downside trajectory, Scenario 1 targets T1 at 49,200 to clear immediate sell-side liquidity. Scenario 2 targets T2 at 48,800, tapping into a deeper discount demand array. Finally, Scenario 3 targets T3 at 48,300, sweeping the major low liquidity pool. This is an educational video, not investment advice. Currently, the asset remains in a highly sensitive zone. Track these key structural zones closely, manage risk properly, and monitor price action for institutional confirmation. We must protect trading capital always. Follow for more. The next analysis is coming very soon.